Hi guys, this is Constance from ZUA. Today we're going to talk about a special category of taxpayer known as a personal service provider. A personal service provider, commonly known as a PSP, is a company or trust where the owner of the business renders service in his or her personal capacity using the business as a vehicle. According to the Tax Act, a personal service provider refers to a company which offers particular services, and in reality, it is the person providing the services who represents the company. This is according to the 4th Schedule of the Income Tax Act 58 of 1962. Any company, close corporation, or trust that meets the definition of personal service provider and is in receipt of remuneration as defined in paragraph 1 is subject to the deduction or withholding of employees' tax. In determining personal service provider and whether employees' tax must be deducted or withheld from amounts paid or payable to them, the following tests should be performed. If the receipts do not include remuneration as defined, no employee's tax is deductible. The definition of remuneration excludes payments made to independent contractors who are natural persons or trusts. The exclusion does not apply to a personal service provider. There is no need as a result to determine whether the personal service provider is an independent contractor for purposes of the 4th Schedule to the Act. If remuneration is paid or payable, then proceed to the next test. B. The term connected person is defined in section 1, subsection 1, and must be applied accordingly. The word service includes the provisions of a person to render a service or working for a client, including, for example, companies, close corporations, and trusts operating as labor brokers. If the service is rendered personally by any person who is a connected person in relation to the company, close corporation, or trust, then you need to proceed to the next test. So you need to then determine whether the company, close corporation, or trust employs or is likely to employ 3 or more full-time employees throughout the particular year of assessment who are, on a full-time basis, engaged in the business of rendering the service and who are not holders of shares or members of the company or close corporation, nor settlers or beneficiaries of a trust, nor connected persons in relations to such person. Note, if this test is satisfied, the company, close corporation, or trust is not a personal service provider. If this test is not satisfied, then you need to proceed to the next test below. This is fun and games, right? For purposes of employees' tax, it is necessary to determine whether the person would have been an employee as defined. For example, if the person would have been an employee, or rather a person in receipt of remuneration, or to whom remuneration accrues as described in paragraph A of the definition of an employee, then the company, close corporation, or trust is a personal service provider. If the services are rendered mainly at the premises of the client and the client supervises or controls the activities of the person rendering the service or the activity of the company, close corporation, or trust, then the test is positive, that is, a personal service provider. If more than 80% of the income of the company, close corporation, or trust consists or is likely to consist of income from only one client, then the test is positive. And then finally, personal service providers, as all other companies and close corporations, pay tax on taxable income at the rate of 27% and trusts at a rate of 45%. ZUA provides a wide range of services. Why don't you reach out to us for an in-depth discussion should you require any additional support from us? You can call us, send us an email, or contact us via our website. We look forward to hearing from you.